So I'm going to start off just touching on kind of what we thought was going to happen this year. And we knew at the beginning of 2020 that it was an extraordinarily different year than many in the past have been. There were a lot of things that were, looking like they were brewing, but we didn't know what they were going to turn into. And so we always like to talk about the predictions we make at the beginning of the year and kind of, talk around if they came true, if they didn't come true, and we'll wrap up by, what we think is going to happen the rest of the year. But first prediction we made this year, you can see the line says the 2020 really is the year of uncertainty. And I don't think when we said that, we really understood how uncertain the year was going to be. At that time, the election and geopolitical risks with North Korea and China tariffs really seemed like the big deal. The pandemic, we didn't even have a name for it when we first started talking about it at the beginning of the year. It was out there, but it really wasn't something that was a big thing we were talking about back in January, early February. But we knew, all those things came into play. And so at the end of the day, really what we said was this is going to be an uncertain year. And when times are uncertain, you need to manage for the downside because any one of those things can cause significant downside. And if you do, you're managing your business well. And if things get good, it'll take care of itself. At the end of the day, it really kind of reversed itself because the good came before the bad this year. So the upside came before the downside. And we'll talk more about that. One thing that we typically predict when we know we're in times that are uncertain and revenue's uncertain is that owner operators typically will stick with what they're doing. It's not a great time to be changing business, but we put a question mark because we really haven't gotten that one right completely so far in 2020. The pandemic has, caused some sea changes in some segments of the industry. So for sure, if you're in the oil field business, you had to change what you were doing. If you're in the flatbed business, you got hit pretty hard. And so you might have to change what you were doing. Oftentimes we'll see drivers change between the spot market and contract market, maybe running with the fleet. And, that stayed fairly steady, but in the last 6 weeks, there's been a lot of change going on there too. One more thing we predicted was that owner operators would run more miles in 2020 to maintain the same net income. We knew that it was going to be a challenging year, and we really hadn't seen that happen last year, even though last year was a challenging year, but we could kind of see that trend coming. And so that one's true, and we'll come up with some data to show you exactly what that meant. The last thing is we predicted, because of the uncertainty, that this would be a relatively flat year as far as net income goes. And so owner operators were going to have to work a bit harder to make some money. So we get to what really matters, and that's net income. And, I think I'm really happy to say, and Max teased this a little bit, net income, I guess we could all be really pleasantly surprised, is only off 1.5% or $952. That's looking year over year. So that's 2019 versus 2018, 12 months versus the prior 12 months, to an average of $63,780. So again, you can look at the bottom right of this slide and see the flatbedders, they're off $4,800. I've already talked about it. That segment was hit harder than any other. The reefer guys are playing some catch up this year. They're still in the green. Actually, the reefer guys are doing okay. Independent's about break even and dry vans down a little bit. But again, the important thing to see is that as tough as the first half of this year has been in so many ways, things are okay. So, we did something we haven't done before on the next couple of slides, and we drilled deeper into just looking at the first 6 months. So it's interesting to see 2018, by all means, was a great year, maybe the greatest year in trucking. That's when the ELD mandate came in. There was plenty of freight, rates skyrocketed. And so many look back on 2018 as the best year in trucking from a profitability perspective. And then 2019 was a challenge. So you can see net income for the first 6 months. And then you look at 2020, and the first 6 months of 2020, net income is actually better than either one of those years, even the best year in trucking of 2018. So we got to drill a little bit deeper, and we'll look on the next slide to kind of understand that. And when we go back, 2018, we were coming off of a kind of a rough 2017, so we didn't really get going in 2018 until second quarter, and for sure the back half of the year. So the first quarter wasn't the best, and so we have good comparisons when we're looking at January, February, and March. We did really good, and even in April and May. And then the bad news is when you look at May and June, we're starting to see that drop off. in net income. And so the thing that kind of concerns me is we know March and April were months of people hoarding goods and tremendous freight volumes while we're restocking shelves. And then the freight cliff kind of hit and things got a little bit difficult in May, continued to be a little bit slow in June. And, so the back half of the year there's no certainty for sure. And it's likely probably going to be a little bit tougher than it was the first half of the year. But we have to keep in mind long-term trends and, election cycles. And, so when you look at this chart, we've had three different presidents all the way back to George Bush in the early 2000s, President Obama for 8 years, and then President Trump for the last 4 years. And we all get caught up. I'm going to talk about the election a little bit. We all get caught up in election cycles and what does that mean? But at the end of the day, what I really want to paint is there's a long-term positive trend for owner operators. For sure, the Great Recession back in 08, 09, 2010 hurt. We may go through something like that as we continue to deal with COVID for the next couple of years. But if you can stick it out and manage your business, the long-term trend for income and net income for owner operators is a good thing. Click one more, James, and we'll get the graphics up on this slide. So again, painting the picture, over time, the last 18 years, the average owner operator has gone from driving 139,000 miles down to 102,000 miles. Net income's gone from 47,000 to 63,000. So, a lot of times what we need in this business is a dose of reality because we can get caught up in pandemics and riots and presidential elections and think the world's coming to an end. So again, I like to kind of keep in perspective the long-term trend. And when we do that and we look at this slide, things are good for owner operators. We're working, less miles. We're running less miles, even though we're working plenty hard as owner operators, and we're making more money. There's no doubt that those things change a little bit, week to week, month to month, year to year, but the long-term trend is still a good trend. So we'll wrap up at least my prepared remarks by talking about what do we expect for the rest of the year. Government stimulus has a big impact on freight and capacity. We've seen that for sure in the last 4 months. $3 trillion will make an impact on anything, right? It kept the economy alive. It kept freight moving. It kept the unemployed, able to make payments and buy groceries and all those kinds of things. And it kept freight moving for those that were driving. One thing that's happening right now because of the political stalemate is that unemployment ended 3 weeks ago. And really our belief is that a large amount of the idle capacity came from the company driver market. There's many owner operators that got the extra $600 in weekly unemployment on top of what they were already making. And, it might not quite have offset exactly what they're making on a weekly basis, but it came close. And in some cases, maybe they made more money. So there was no incentive to work. So a lot of company drivers sat out the pandemic. They just stopped driving and collected unemployment. That ended because of the political, football that's going back and forth 3 weeks ago. And today we're hearing and seeing from fleets and orientations that many of those company drivers are coming back into the market, which is going to bring capacity back into the market. One other thing I just want to remind owner operators of that are on the phone or on this call, this was a weird year from a tax perspective. We had the tax deadline extended from April 15th to July 15th, which was great. Helped a lot of people, gave them more time and gave more time to pay. We also had the first quarter tax estimate extended. So I guess what I would say is that might have made some of us lazy as far as dealing with our taxes and getting out of the habit. We maybe needed the money to survive. I just want to remind you, taxes are due, taxes are owed. And we would hate to see a bunch of tax resolution issues, jump up by the end of the year because drivers are behind on taxes. So even though they were delayed, they weren't ended. So just remember, you got to pay your taxes. The second point is the election is all that matters until November. I kind of talked about earlier, the data shows owner operators have done okay through 3 different presidents. They'll do okay if they want to work hard through whoever the next president is. At the same time, there's plenty of ramifications, right? Higher taxes, lower taxes, capitalism versus, who knows what. So I think the hard thing right now is there is not a business person in America that is willing to make a long-term plan, spend money, invest, buy capital goods until we know what the outcome is of the November election. So on top of COVID, there's just a lot of uncertainty, which makes people just kind of hunker down and wait for something to happen. I could not make a prediction on what's going to happen in November, but it'll have an impact on owner operators' businesses. a little bit one way or the other. So, we're in wait and see mode. COVID. I'm no medical person. I listen to a little bit of news, but not a lot of news because I don't want to get jaded. One thing I truly believe, just because I really try and live in the real world and talk to people rather than listen to the news, because I want to believe what I hear from people, not what the news is trying to tell me, is that I don't think another nationwide lockdown is going to happen. I think socially and economically, we just can't afford it and we're unwilling to accept it. Most people I know are getting back out in the world. Maybe not hopping on an airplane and going on a vacation, but they're out buying things. They're out in the world. They're driving. They're going to stores. But we still have COVID going on, right? They keep saying there's going to be a resurgence. We just had a resurgence when the weather gets cold and flu season hits. So even if we don't have a lockdown, COVID continues to make people scared, keep some people from doing the things that they've done. And so that's going to continue to impact us with the lower GDP. So, I don't expect in the next 6 to 12 months, we're going to have a crazy cycle like we did in the second quarter. We're going to have a boom where everybody hoards goods, and then we're going to have a bust and a, freight cliff. It's probably just going to be more steady to down a little bit, I would guess, through the end of the year. So we got to be prepared for that. The other thing that I think is really important is just understand that changes come quick. Typically, we can kind of, gauge what's going on economically and unemployment numbers and housing starts and all those kinds of things. And we can kind of see things coming a little bit. This year, I mean, it just literally freight boomed and we didn't even know it was coming. And then freight fell off a cliff and we didn't even know it was coming. So as an owner operator, how do you deal with that? You got to manage and you got to be prepared to run if you can run and you're able, and to manage your costs. I think the biggest question I've already talked about a little bit is how quickly will capacity come back in the market? Did the rough COVID days eliminate capacity? Did trucks get repossessed? Did people give up on trucking? And so we eliminated capacity, and now, freight's come back somewhat strong. And that's why we're at a 91, truck stop market demand index. Or did all the drivers who are collecting unemployment, are they going to, go back and get jobs? And are we going to flood the market with capacity? From Wall Street to every fleet I know to drivers, that's kind of everybody's trying to figure out is, where does that equation go through the rest of the year? I wish I had an answer, but I really don't. It's kind of day to day, and we'll just have to wait and see.